Hey, what's up, stock compounders? Brad here. So, Bill Ackman's Pershing Square Holdings generated 70% return last year, 2020. That is insane. Okay, guys. Now, Pershing Square Holdings has assets under management, within the last week of around $12 billion. Okay. So, a 70% return to get to $12 billion, that is just incredible. That kind of return managing so much capital. This is something I first saw following Acquirers Multiple on Twitter. So check that out if you're not following Tobias Carlisle there. But let's just kind of go through what contributed to this 70% return last year for Bill Ackman. So let's see, we've got an overview of performance, basically giving the NAV performance, total shareholder return. It's a pretty chart there. So biggest contributions, all right, this is really what we're after here, came from index CDSs at 36.6%, credit default swaps. So this is, the thing that Bill Ackman got a lot of attention for, a lot of heat as well. Back in March of 2020, shorting corporate debt, all right? I believe he was on the hook to pay $27 million per month for these CDSs. Now, I believe in the first month that he put this position on, it paid off, right? So he went from paying $27 million to making $2.6 billion, nearly 100x in less than a month. So just an incredible play from Bill Ackman last year in March. So that made up the majority of this 70% gain last year for Pershing Square. The second largest contributor is the SPAC, right? Pershing Square Tontine Holdings, the largest SPAC of all time. I think it was like $5 billion, right, when it IPO'd. It started at $20 per share. I think now it's around $29 per share. But I'm pretty sure it's been as high as like $35 per share. Very interesting. A lot of excitement around this SPAC. And of course, these gains, in the long run are really all dependent on who this target company is, right? What company Pershing Square Tontine Holdings is able to bring public. So we're eagerly awaiting the result of that. You've got Lowe's, Chipotle, each around 10% of the performance. Starbucks, okay? Notice here we've got Starbucks and we have Restaurant Brands International. So for those of you who follow Monish Pabrai, which a lot of you do, I know I get a lot of people who follow Monish Pabrai on my channel. Out of the 5 spawners in the free lunch portfolio, Pershing Square owns 2, right? Starbucks and Restaurant Brands are both in that kind of bucket of 5 spawners for the free lunch portfolio. So that's interesting to see. Biggest detractor, okay? So not everything went up in the portfolio to get to that 70%. There were a few that lagged. Berkshire Hathaway was the biggest laggard of all of the positions owned by Pershing Square. So that was interesting. Of course, we know Berkshire is somewhat aggressively buying back their own stock. So they're pretty excited about the low share price, at least in the last 6 months or so. But Pershing Square did sell out of Berkshire Hathaway last year, so that was also somewhat interesting to see. So that's where the detractors were. We can look at Pershing Square over the last 16 years to see where this 70% kind of falls in the grand scheme of things. It's the highest since inception. Okay. So you can see here 70.2% in 2020. 2019 was also outstanding at 58%. But Pershing Square, it's had some big years, 42%, 40%. So, no stranger to great returns. So we're going to take a quick peek at this annual investor update because there's some interesting stuff in here. We can go a little bit deeper than that overview. So let's see, we got that same chart, 2020 performance, new bond issuances. I'm not super interested in that. Total debt to total assets ratio. That's not quite what I'm interested in. So we've got this quarterly dividend, okay? 81 million of capital returned was through this quarterly dividend, which is about 1.1% yield. We've got share buybacks, okay? 286 million of share buybacks done in 2020. Retired 6.6% of the shares outstanding. Let's see. So 2020 share buybacks compared to cumulative total shares bought back since inception. Okay, strong year in 2020. Pershing Square really thought that the stock was undervalued, so bought back fairly aggressively. But since inception, 21% of the shares have been bought back. So you can see the discount to NAV. The shares were bought back at 32%. Pretty impressive. This is big news. This was big news pretty recently. On December 21st, the Pershing Square Holdings entered the FTSE 100 index. All right. That's the 100 largest companies on the London Stock Exchange, which is where Pershing Square Holdings is traded. So that obviously is going to put some demand on the stock, right? For all of these institutional investors who own these indexes, and the indexes themselves are kind of forced to buy Pershing Square Holdings because of this. Let's see, what else do we want to look at? So as compared to the S&P 500, right, in 2020, 70% versus 18.4%. We all know the S&P 500 had a pretty solid year in 2020, despite what happened in March with the 30% or so drawdown. It was a really good year for the S&P 500. But Pershing Square, just knocked it out of the park. Same chart there we already looked at. Here's the same one also that we looked at, the contributors for 2020. Detractors. Now this was interesting. Pershing Square's strategy has proven to be defensive in down markets, okay? So if you're looking versus when the S&P 500 is up on a monthly basis, the Pershing Square Holdings lags a tiny bit, right? 2.9% versus 3% for the S&P 500. Now, when the S&P 500 is down, in months that it's down, this is a pretty dramatic outperformance, okay? Pershing Square is only down 1.8%. Whereas the S&P is down 3.8%. So, that's as a value investor, that tends to be how these great value investors outperform indexes over time, by not losing as much ground in down markets versus outperforming in up markets. Definitely an exception this year. Obviously, we had an up market, but you could argue a lot of the gains for Pershing Square in 2020 were actually a result of, obviously that biggest one was the credit default swaps, but then just as importantly, I would say, is what was done with the proceeds for the gains on those credit default swaps. So let's take a look at that. Here's the total assets under management for Pershing Square, 12 billion as of February 16th. Right. Invested hedging gains at deeply discounted prices. Okay, so that's what we're going to talk about here. So here we go. Redeployment of hedging gains. This is key, guys. Immediate reinvestment of hedging gains allowed us to increase our exposure to high-quality businesses we understood well at deeply discounted prices. Okay. Now the biggest one there was Starbucks. So you got this 2.6 billion coming in from this, shorting corporate bonds bet. And where was that money deployed? It was deployed into Starbucks, right? A great spawner, for a 78% cumulative return. So from basically March, April timeframe to the end of the year. All right, just incredible what that does when you've got a bet that really pays off on the downside, and then you're able to pump those gains at bargain prices in these stocks, and then they just do incredibly, obviously, for the rest of the year. So it was really kind of a double move, betting that it was going to drop, and then at the bottom plowing those proceeds back into these great companies. So you've got Starbucks, you got Howard Hughes, incredible return this year, Lowe's, Hilton, Restaurant Brands. So that's really the story here, is that kind of two-step move. And of course, you've got the SPAC, which has done incredibly well so far, the world's largest SPAC. Let's see. Right, this is kind of a unique thing about this particular SPAC. The sponsor warrants are 100% owned by Pershing Square funds. Unlike other SPACs, no founder shares accrue to individual promoters. Here's the SPAC price performance since IPO. So back in July is when this thing went public at $20 per share. I think this was the peak, 35, because like I said, now it's down to about $29 per share. Yeah, guys. So that's the big news for Pershing Square, and then they kind of go through their individual. There's like 6 or 7 equity positions, a very concentrated portfolio run by Bill Ackman. We don't need to dive into each of these right now. I just want to see if there's anything else. Right, exited positions. So Berkshire was exited in May of 2020, and the reasoning there, we made the decision to sell the position to deploy the capital into more opportunistic investments. Maybe something that Bill Ackman regrets. We'll have to see how that plays out, but that's the decision that was made. So anyway, guys, I just wanted to kind of take you on a whirlwind tour through what's behind this 70% performance by Pershing Square Holdings in 2020. Just incredible. Let me know if any of you guys own Pershing Square Holdings or Pershing Square Tontine Holdings, the SPAC. Very curious to hear from you guys, and what you think of all this, what you think of Bill Ackman's performance in 2020 and what you expect moving forward over the next couple of years. Curious to hear from you guys. I know Ackman is pretty bullish on this Fannie Mae Freddie Mac bet. So, you know, moving through the Supreme Court should be interesting to see what happens here. I think there's a write-up for Fannie Mae in Value Investors Club. I think Bill Ackman was thinking it could be like a 10x or something like that. So it's pretty interesting. I haven't dug too much into it yet, but check that out if you're interested. And let me know what you find. I'd like to know more about that. Anyway, guys, just wanted to share this breaking news with you. And with that, I will see you all in the next video. Take care.